Good evening. This is Juan Reid here again. I hope you guys are happy to see me. I'm happy to see you. Um, Tonight, we're going to discuss projected investment timeline. Okay. Uh, and this type of investment, a large investment like this, well, the normity is that any investment that is going to grow into a larger organization is going to have three, maybe even more than that, but three initial investment levels, and not to name them, but I'll say it's normally, specifically if it's a startup that has people around it that have trust relationships with certain people. There's a small level, which is the startup, medium level, which is regular investors with a little money, maybe some small family houses. And then the next level is private equity or going public. Okay, going public means that you recruit public funds, and that may be organizations too, venture capitalists, etc. And they have an opportunity to invest the company because at that point, you're attempting to get on the stage of the stock market and allow yourself to be invested in by the world. Okay, um, and that's a very lucrative time. But we're going to talk about one of these stages, and this is the second stage. And I'm going to give you guys a rundown. I've created a document. Everything is always in a document. And eventually you can go online and take a look at this. Thank God for ChatGPT and the best level of ChatGPT, because I am allowed to be as creative as I want to be. The thing about it is I know a lot about contracts. I know a lot about business. But when you can reach and grab all types of information from everywhere, Harvard University, Georgia Tech, all these business schools all over the world, then that's a benefit. I don't know what that was. And so I hope you guys are having a great day. You have any questions, there's the portal right there to ask me any questions. But if not, I'm going to talk about this document. The document is called, and it will be placed on the website, it's called Private Equity Readiness and Due Diligence Memorandum. Okay? Let me explain what that means. Private equity readiness means the way that I'm building the company is to go to the second level. Okay? The way that I'm building the company is to go to the second level. And I built two options in here. One option I think you guys are going to like. The other option you may not like so much, but it won't be uncomfortable, right? So let me talk a little bit. I'm not going to read the executive summary. You guys know that we talked about that stuff. It's basically a repeat of what we talked about last night. But I'm going to go over what is called the investment thesis. Okay, the investment thesis says heritage REITs, which is us, transition from community to institutional scale is grounded in stabilized yield assets, hospitality and healthcare properties producing consistent 13 to 16% net yields, dual entity capital efficiency, management equal operator, holdings equals treasury. Now, when you read this stuff, I need you to understand something, because I'm having trouble myself, even though I understand it and I wrote it. A lot of this transitions from an articulated communique to a formula. Okay, and you don't have to be able to understand that transition. You just have to take your time to know what it means, and that's why I'm on here to explain it. When it transitions to that, it says dual entity, capital efficiency, management equals operator, holdings equals treasury. What does that mean? We talked about that the other night. That means there are two companies, Heritage Management, and the other company is what? Heritage Holdings. Okay. One is the bank, one is the operator. One is the bank, one is the operator. Okay. That's all that means, but you got to be aware. It says number 3 says built-in community capital engine, an existing investor network capable of generating repeat equity infusions. Now that's important. I'm gonna say that again. Built-in community capital engine. That's us. So let me tell you guys the genius of a low entry level investment and so many investors. Here's the genius of it. If one of my board members or whoever, right? If I ask him for $10, I can get that. If I ask him for 10 million, I probably can't. He'd probably curse me out. So listen to this. I need you to think about this as I'm saying this, because I need you to evaluate as I'm communicating. If you gave me $500 and you said, wow, look at the company that we built just giving $500. Okay. If I came back and said, because you can see something, you can see it operating, you can see it working, you're getting updated documents, the company is progressing just like we told you it would scale, what would you do? You say, well, shit, all Mr. Reid needs is another $500 of my money? Hey, I've only given $1,000. How long do you need to hold it, Mr. Reid? So when it says that, a second round of capitalization, we have a built-in, because the startup group is at such a low level that they're not going to miss the investment. They have the opportunity and they have the understanding and resilience to wait $1,000 out for 5 years, 3 years, or the projected 10 years if you want to, right? Now, most of you won't wait 10 years. When you get $1 million in your account, you're going to say, okay, well, Mr. Reid, I think I'm going to take that $1 million out of there. And that's fine. That's fine. But you need to understand, I need you to understand why my approach to this was 40,000 people. Hell, I don't care if it's more than 40,000 people. I just knew I needed to be at that point where we could start in the middle. You understand that? And having those many investors allows us to be diverse. We could come back to you and say, hey, we need another $500. Because this is what this means. The first thing I said when I came on, well, let me step back. The first thing I said when I came on tonight is that there are normally 3 rounds of investment in every big company or company that potentially wants to grow big. It's normity. You know, it's not abnormal at all. And in telling you that, you have to realize you're one of those options. So this is what will happen. There'll come a point where we'll go out, we're looking for investment. Why? Because we don't want to spend our $20 million and we don't want to spend any more of the $200 million line of credit that we have. So what do? We go out to private equity companies, we go to venture capital companies, and you say, hey, let's say at that time we're worth $300, $400 million. But it's time to grow to another level. Because with $200 million, believe me, you can grow the company pretty significantly, like I told you, like I discussed with you guys last night. But you don't want to mess with that, and you want to keep the company stable. So what do? You go out and borrow some money at a low price point, okay? To continue to do what? Grow the company, to make acquisitions, to invest in other people's projects, to build our own projects, right? So we may borrow that. Or we may come back to y'all. And see, in this document, there's an evaluation for coming back to the original group. And what does that mean for you? That means you have an opportunity to make your stock more valuable. Do you understand that? You have an opportunity to make your stock more valuable, your ownership in the company more valuable, okay? To see the company progress. And here's the big part about it. You're not hurt. You're not putting up $100,000. You're not putting up $1 million. You're not investing $2 million. You're investing at the most $1,000. Okay. Now that you invest $1,000, you can just sit back and wait 5 years and walk away with couple of $1 million. You understand? So that's essentially what that means. I'll carry on. Keep listening, guys. That's the investment theses. Can anybody tell me what a thesis is? Can anybody tell me what a thesis is? THESIS. What is a thesis? There's a portal right there. Somebody in the chat, tell me what a thesis is. I'm going to keep reading, but I'm going to wait till y'all tell me that. The capital structure overview. You guys have heard this, and you're going to hear it 1,000,000 times. Every document you go over that's on our website is going to say the same thing over and over and over. Capital structure overview. Community investors, 40,000 investors, $500 equals $20 million. Seed equity. Base common A. Credit facility, $200 million line of credit leverage engine. Okay. 4% interest. Okay. And to me, that's kind of high, but that's kind of high for me. So, but this is worst case scenario. Okay. A thesis is a statement or central idea that expresses the main argument, claim, purpose of a piece of writing or research. Very well said. Thank you for that definition. I'm going to continue. It talks about the credit facility. Some people call it a tool. Some people call it a bank letter of credit, but it's always a tool. That's what they call any bank, or they call it an instrument. Okay. The bank will give us an instrument that allows us to borrow $200 million. Okay. That's the credit facility. And it's at an interest rate of 4%. Now, normally, as long as you keep the interest paid with a little more, they don't care. They don't care. So somebody evaluate what is 4% of $200 million. All right, I'm going to continue going. I'm going to talk about the private equity, and this is another option, and this is what we were discussing previously. Private equity Series B preferred. $250 million to $300 million expansion capital. Remember, I was saying earlier, there may be somebody we'll go to in the second round, like a private equity or venture capital company, to borrow $250 to $300 million. And that's simply so that we don't have to, it's $8 million. Now, Malik, if we can't make $8 million, then I don't know what to say. Okay. But this is how that works. As long as you can pay the interest and a little more, and trust me, we can get a better deal than that. As long as we can pay the interest and a little more, we still got $200 million. So we have to pay interest on the money. Okay. Now, so I've gone over the investment theses. And if somebody needs me to go over that again, let me explain what it is first. Somebody gave the definition of it. Let me explain what it is. The investment theses is simply the framework of our next level of investment. Everybody got that? The investment thesis is simply the framework of our next level of investment. So when you go look at this document, you're going to say, this was what Mr. Reid says. When you read the investment theses, all you're saying is, how are we going to arrive at the next level of investment? That's what it is. Based on what Omali says, a thesis is a statement or central idea that expresses the main argument, claim, or purpose of a piece of writing or research. And I think that's a good definition. We've spoken about capital structure. You guys know the first part. The part that you didn't know about is your part in it and giving you the option to invest more. And you didn't know about the private equity and venture capital opportunity. In all honesty, it's always best to borrow money internally, except it's always best to borrow money internally and not outside of the company. So if we can leverage that ourselves, that would be better. But it's usually cheaper. Okay, after I laid out capital structure, I'm going to go to private equity participation model. Now, private equity participation model is what I just discussed. This is going to tell us what we're going to pay for the money, and it's going to tell us what private equity organizations expect. Okay, private equity participation model instrument, convertible preferred equity Series B. That's just an example of a model or modality or tool. Preferred return is 12 to 14%. Optional conversion to common plus 10% premium after year 5. Okay. That's what we'll owe on that money. Almost 12 to 14%. Right. I don't want that, because when we give our own money, we don't have to pay anything on it. You understand? See, that was the genius of Mr. Reid, and I'm joking, but even I am a genius. That was the genius of this. If I ask Omalik for $500 and I tell her, you're not getting this back, but when you get it back, it's going to be $13.8 million in 10 years. Okay? Or I'll say, this will be $1 million in 5 years, and you can take your money out, or some of it, right? Let's be honest, you don't need $1 million to live, but it's your money. You can sell your stock, you can do whatever you want to do, right? Yeah, you can sell stock within a private company. You can sell it to someone, or you can sell it to somebody else. Tell it to somebody you know. You can do that. I don't know if you guys knew that. So the exit redemption year is 7. So in other words, we have it 7 years to pay it back, or roll over into Heritage Global REIT, control 1 to 2 board seats. This is what they want. This is their expectations. They want to control 1 to 2 board seats. They want veto rights on leverage. 4.5 is going to come out. I don't want to say that because I don't want it to be true. They want 4.5, still having trouble saying it, times our net operating income and full audit access. That's what you're giving up. Now, which one will you want? I mean, you guys, which one will you want? Now, you guys can go back and listen to this, because as I post these, but that's what the private equity company wants. That's what they want. And this is why, let me just lay out an example. This is why, if you look at the story, they say that Amazon didn't make any money like for the first 30 years. Okay? They just kept investing, re-upping, right? And some of you would like to believe it was because of the genius of Jeff Bezos. It wasn't. They had a vision. I need you guys to understand that. See, in Western business philosophy, I'm going to use those words, there's always this superhuman aspect to it. Why do you think that is that? Why do we have to go back and find out Warren Buffett was already rich, his family was rich, all these other people were rich, Bill Gates was already rich, and his dad controlled the Greater Northwest. His mom was on the board of IBM, and Zuckerberg was already wealthy. All these people, right? These stories. But in reality, It takes time to make money, but more importantly, it takes a plan. It takes a plan. You guys have heard my story. That's why you listen to it. Okay. What I'm asking you is not to trust me, trust my ability. Trust what I can do. Trust what you see I work out. Trust who you see I bring to the table. Don't trust me. Trust the paperwork. Always trust paperwork. Paperwork has legality behind it. That's why you have accounting firms. That's why you have banks. That's why you have a CEO. That's why you have officers. I am not an officer of this company. What I mean by that, I don't mean that I'm an untrustworthy person. What I'm saying is this is how you do business. No one should stand in front of you and say, trust me. They should say, trust the institution that I'm putting together. Let me know y'all hear that. Trust the institution that I'm putting together. Trust that Mr. Reid didn't jump when y'all wanted me to jump. Again, when I started this, you guys had to realize I had 10,000 people willing to give me $500. That day, they were in my inbox. That's $2 million. That's $2 million. Guess how much of it I took? None. I had to send out a blast email. Do not send me your money. Because literally, like, well, how do we send the money? Where we send the money? I'm like, no. This is when I spoke about this over a year ago. So it's taken me a year to educate you guys. And if you haven't taken the time to go online and look at all those documents, look at what we have, then you're not serious. Hey guys, I'm going to tell you something. I ran a simulation today, sort of like I did with the community REIT. But unfortunately, when I ran the simulation initially, I didn't have ChatGPT. I had to do it. Okay. So I came up with these perspectives and scenarios by mitigating things myself, understanding my knowledge, my relationships, and I thought I had to think what would be best for my followers. Okay. When I did that, this is what I came up with. Right. Well, I ran a scenario basically today saying that if I had a relationship, okay, and I wanted to start a sovereign fund, and that sovereign fund, I said, ChatGPT, recognize and identify all working age people in the United States that are Black. Okay, working age, that's from what, 18 to let's say 60, right? And then I would say, run the simulation and tell me, with them investing $250, how much money could they raise? And I it's a lot of stuff, and I'm going to tell you guys about it. Mr. Reid has a lot of knowledge. So I put a lot of stuff, I always say, if you ask ChatGPT you got to ask the right questions. And not even ask questions, you have to tell them what you want. Because you got to know what you're doing. Basically, we would raise $7 billion in one day. Now, again, that's over time. You don't want the money in one day. Like, we're going to get the money in one day, but you don't want the money in one day if you're doing a sovereign fund. Okay? What is a sovereign fund? A sovereign fund is essentially a community bank. It's a community bank. Saudi Arabia is supposed to be a sovereign fund, even though the Saudi family runs it. And it's at their discretion. Okay? Qatar is a sovereign fund. This Indian reservation thing that you guys see all over the United States and in Canada, that's a sovereign fund. Okay? They do their own investments. They control their own finances. This is what y'all aren't going to believe. Nigeria has a sovereign fund for the African diaspora. In other words, they make money here and invest over there. They have a sovereign fund. They're not sitting around worrying about what the banks are. I'm going to blow it up with y'all. The Jewish diaspora has a sovereign fund. Okay. Essentially, we let me not get emotional. We make things so difficult when it's simple. I am going to lunch Thursday. I'm probably going to spend $400 at lunch. Sharice, can you tell me, can any of y'all tell me this Friday where y'all going to go? Tell me this Friday where you're going to go and how much money you're going to spend. If you're not going anywhere Friday, you're going somewhere Saturday. Everybody tell me in that inbox where you going and exactly how much. You know how much you're going to spend. You know how much you're going to spend. Everybody tell me how much you're going to spend. But if someone asks you for $250 to start a sovereign fund, 29 million people is what it said. Do you know? I didn't know there were that many Black people at a working age. I didn't. 29 point. So there's 40 million. Well, it ain't 29. It ain't. Yeah, it's 40 million. Yeah. Teresa, every time she go outside, it's $200. I'm not being funny. I'm not being sarcastic. What I am being realistic is that these are things that are possible. These things that are possible. And again, that's why I say everything needs to be regulated. So when you go on the website, read everything on there. Take the time to say, look, Mr. Reid said read everything. I'm going to read everything on here. That allows you to get a better understanding of what is going on and what's going to regulate. It took time to create those documents that shows you how your money is going to be dealt with, that I can't touch it. I don't have any capability. The only thing Mr. Reid has is 15% ownership of the community REIT. But I don't have any control over any money or what people do. I can't say invest in this. All I can do is benefit or lose from it. I'm not taking any dividends. So in other words, the 90% that's supposed to be distributed to all investors, I'm not taking any of that for 5 years. I only take any money on the 6th year. Okay, and I might not take that then. I might just pull out some of my 15% or sell some of the stock. Okay, but anyway, let me go on because I'm not going to be on here an hour and a half tonight, but I want to go through this document. For those of you who are just joining us, the document tonight we're discussing is, let me make it simple for you. There are 3 levels, as we discussed, of investment, and we're talking about the second level. Every major organization, there are 3 levels of investment, at least, okay? And we're talking about the second. We discussed private equity, and we've also discussed going back to our initial startup investors, okay? For anybody that's been listening, what is the cheaper opportunity? The cheaper opportunity is obviously going back to the internal investors and saying, hey, give me another $500 and I'll make your stock, I'll compound your stock. Okay, I'll make this more valuable. Okay, so let's continue. I'm sorry, I'm having some allergy issues. Okay, we talked about the private equity. We talked about them wanting 2 board seats. They want veto rights on leverage, 4.55% of the net operating income, and full audit access. In other words, they want to be able to audit everything we do, and that's reasonable for any investment group. All right, now we're moving on to governance. I didn't say governance. I said governance and control expectations. Private equity partners will share governance with existing stakeholders under a dual class system. Class A, common. Now, you guys understand that there's 2 types of stock, common and preferred, okay? Community investors, non-voting, and Class B is the preferred, private equity, partially voting. Okay. Then it speaks about me. I'm in here as well. So please, the reason I'm in this governance position is because my 15% is a universal part of every contract. Okay. And actually, there's a contract that I have to go and amend to install the 15%. Okay. And I'm going to do that. But it says proxy equity. Now, this is speaking this has to do with governance because the governance controls all the regulatory aspects of finance and money. Okay, what goes in, what goes out. Let's protect Juan Reid. Okay, just like protect the private equity, just like protect the stockholders. If you go look at the documents, there's a protection mechanism for all the stockholders, which are you guys. Go and read it, copy it, download it, and have it. Okay, learn it like it's your Bible or a scripture in your Bible. Okay, let me talk about that. My equity, which is the proxy equity, it'll say proxy equity, Juan S. Reid, which is my name, 15% perpetual interest, immutable family success. Now, does everybody know what that means? Does everybody know what that means? I'm going to read it again. It says that my stock, now 15%, is perpetual. Okay, I'm going to explain what you meant because I put that in there. That means no matter what happens in the company, you can't dissolve my stock. So let me give an example. Let's say that there's a great opportunity to sell the company in 5 years. Whoever buys the company got to buy my 15% and pay me what it's worth or what it's going to be worth. Do you understand? Okay. The second part of that's perpetual interest. Immutable. I need my guy O'Malik to define immutable. O'Malik, can you define that word for me? Everybody on here knows that I'm a big word guy. I'm a big word guy. If you understand words, you can understand the world. I don't take any word lightly, and I don't want you to. Come on, Malik, what is immutable? We're going to wait till you get it. We don't have much longer, guys, but hang on. And this document will be on the website tomorrow as well. You have to ask Siri. Come on, Malik. You still there? Somebody else get it. All right, I'll get it, I guess. The word immutable means unchanging, unalterable. That's what it means. The word immutable means unchanging and immutable. And unalterable. You understand? Listen, Sharice, you've been watching me for a while. Malik, you've been watching me for a while. What have I told you? I told you in the beginning and on all the conversations we had, I said that I got to protect you guys and I got to protect me. Who started this? Me and you. What you don't realize, we're going to hire big time executives. We're going to hire somebody from a Fortune 500 company. And with $200 million, we can pay them. Do you understand that? I need y'all to get that. $20 million buys a lot of person. Okay? You're going to end up paying this guy probably, I know this scares some of y'all, $8-10 million a year. And then you got to pay the CFO, chief counsel. You got to get some of the best. So to protect you guys, nobody can control your money. Mr. Reid Look, I've talked to 100 lawyers, and I did my own. I have my own understanding, because one thing Mr. Reid is good at is contracts. How do I protect my investors? Get everybody away from their money. Nobody can touch your money except for the fiduciary. So who do we blame when money goes out the door and don't nobody know about it? The fiduciary, which is the CFO. And that's also documented once you read it. Even how your money is taken in. It's called an intake document to protect these stockholders. Go read it. I'm going to have to sign that document. The CFO is going to have to sign that document when we hire him. But immutable means, let's talk about me now. They can't screw me over. See, you guys aren't going to be seen on a regular basis. You're just going to be, hey, I'm a part owner in a company. We're doing just like you are with your 401k. That's all y'all going to do. And you'll get a report in an email probably from your from the company every quarter, every 3 months. And if something happens, quicker than that, right? But I have 15% ownership. This document says they can't do anything with it. They can't do anything with it. They can't say, well, you know, the stock is diluted and we did this. No. It says unalterable. Do you guys know what that means? They can't say, well, it's not worth it. Yeah, it's worth it. Okay? So I protect you guys and I protect me, and that's what I said I would do. Right? Go read the documents. Immutable, perpetual, and it talks about family succession. Now, everybody knows what that means. It means that if I die, all of my stock goes to my family. It ain't nothing they can do about it. It's family succession. You understand? All right? Now I'm going to continue. Risk parameters and mitigation. Risk parameters are like a fence, like my book. In my book, it talks about the fence, and I know all y'all that's listening to me have bought my book. Okay? Poverty to Purpose, Babbitt's Bowler. Y'all better go buy that book. Y'all listen to me all the time. Read my book. It ain't for the money, because I'm not going to make a lot of money selling no book. But it is for information. It's amazing. All right. Risk parameters. Think of risk parameters as a fence. Think of risk mitigation as repair and contingency. Okay? Maybe the fence isn't strong enough. So I add some extra 2x4s. So let's say that. Operational risk, cost or schedule variance, mitigated by fixed price contracts, tier 1 vendors, and audit oversight. I'm going to explain to y'all every word of what that means. Cost schedule variance means make sure the money runs with what you're doing. Do not put the cart before the horse. If you don't have the money to do something, don't do it. Okay? Cost schedule variance. They have to run together. Okay? If I'm paying the money out, I got to get paid at a certain time. Everything got to go together. Mitigated by fixed price contracts. Okay? Cost schedule variance. And then it gives an example. Mitigated by fixed price contracts. What does that mean? You got a contract, or we got a contract for something. Let's say to build a hotel or a tower or whatever. And we're investing in it, whatever, or we actually doing the project. The price shouldn't change because something changed in the economy. Okay? The stock price of this goes down. Now, you still got to pay us this. Okay? Tier 1 vendors. In other words, I don't even have to explain that. You guys understand that. And audit oversight. You guys know what that is well. Credit risk. So you talked about operational risk, talk about credit risk, interest rate exposure, mitigated by mitigated via rate hedging, staggered tranches, and 15% liquidity covenant. Liquidity covenant is essentially holding some money back. Okay. Staggered tranches is how you take your money out and put it in. Okay. How you receive your money. It may, okay. Um, and then mitigated via rate hedging. Okay. That's kind of hard for me to explain. So I'm going to let you guys look it up. Um, okay. The next is exit path is REIT merger or finance. That's before we, yeah, before we would close the company out, we would merge the two companies. We would merge the management company with the holding company. That's what that means. Liquidity risks, exit timing, and valuation. Not evaluation, valuation, they're different. They're not the same thing. Look it up. Mitigated by dual exit paths, REIT merger, and finance. Okay. Governance, not governance. Governance and governance is not the same thing. Governance risk, misalignment, mitigated by defined rights per class, independent committee arbitration. Okay. What does that mean? If there's an issue, uh, there's a committee to discuss it, an isolated a committee. It could be a committee of part of our management, part of our stock, part of our board, and then maybe part of a consulting group. Okay, that's where you have problems in governance, regulatory risk, REIT tax, SEC compliance, mitigated by annual. That's the lawyer stuff. I don't even want to get into that. That's not my job. Uh, there's not a lot of other stuff in here. Let me go over it. Investor pool leverage scenario. Now, all the things that you heard earlier. Let me finish this part. I do need to say this at the risk of parameters. The financial expectation 3 to 7 years. That's the layout because the second level of investment is coming the third year. Okay, can we say that? Third year, right? So financial expectations, year 3 to 7, year 3, 420 million in assets, 45 million in net operating income. Net operating income, I told you guys about that last night. That's everything it takes internally to run the company or that the company receives. And that's also where your dividends are. So every time you hear NOI, that's part of your payment. 60% of that goes as taxes and internal fees, but the rest is supposed to go to you guys. Unless you say, hold it back, Mr. Reid. You can hold it back because we want to keep growing our money in the company. Okay, which is the smart play. Who wants $500 back? I mean, but anyway, you want your money back. You want your money to grow, but look at growth and revenue more than you look at, okay, man, I need $600. No, it doesn't work like that. The fourth year, $500 million in assets, 60 million net operating income, 13% yield. Okay. Year 5, 680 million. That's a pretty big jump in assets, 75 million NOI, 14% yield. Year 7, 900 million. That's a pretty good jump in assets. And then the price is almost the same as the year before because now the company's running steady. Okay, we know who we are now. We know how we need to manage the money. We know where our relationships are, all that. We know who we are as a company. Projected private equity IRR is 17 to 20%. Okay, now that's laid out for the private equity company. In other words, they get 17 to 20% back for lending us $350 million. You're going to be able to read all this. Now, let's go to, I told you guys there were two perspectives when I started this. I'm going to read this and I'm going to be done. The first perspective was private equity. The second perspective is us reinvesting our money and investing another $500. Okay. When we do that, we don't owe anything to anybody. Again, we got to pay them 20% of $900 million. 20% of $900 million. That's a lot of money to give up. Okay. Now, I need y'all to understand something. Mr. Reid, even though I can do all this, it's not my job to explain it. But I am the proxy. I am not going to explain this like an economist. I explain it like a businessman that builds stuff. Okay. I am really, really good at identifying people and placing them in position. Let me tell you guys, first of all, and you're gonna hear this on Thursday. I'm meeting tomorrow. No, I'm meeting Thursday with Jason Home of the Accor family. The Accor family is our flag. It's the company that we're looking at using as developing their hotels. You guys met him, Sharice, a couple of weeks ago when we were on a call with him. Okay, they're the 5th largest hospitality group in the world. Okay, I have a meeting with him Thursday, and he's asking me the date we're moving forward. And just get all the layouts. And as you guys know, the date we're moving forward now is January the 23rd. Okay. All right. Now, this is us. We are the investor pool. So when you get this document and it says, who is it? And you say, who is the investor pool? It is us, right? We're reinvesting. A distinguishing strength of Heritage REIT lies in its existing base of 40,000 investors who entered at $500 each. This structure creates a repeatable, low-friction capital channel capable of generating additional liquidity during the institutional phase without major dilution. What does that mean? What is dilution? Dilution means giving up some of our money. We don't have to give up anything. We don't have to give up any interest. We don't have to put anybody else on the board. We don't have to do any of that. Okay? We don't have to relinquish any control. We don't have to give up any board seats. We don't have to do any of that. That's why Mr. Reid did that. So again, even though I'm not an economist, okay, I know what I'm doing. That's why I chose the number 40,000, and that's why I chose a $500 entry point. Okay. Now, when we hire a CEO, he's not going to talk like me. But trust me, we understand the same things. I was the CEO of a construction company. To say I'm the CEO of a REIT bank, I wasn't. Okay. I don't even want to be. My job was to be the proxy, put all this together, and start it. That was my job, and I'm doing it. Okay. So when I would hear people online, and I'm just going to take this short to say this, and they would say, well, here's another guy, another Jay Harrison, well, the difference between me and Jay Harrison is I've been doing this and things like this for 36 years. Jay Harrison has never had a job. Morrison. Sorry, Jay Harrison. Okay. The other difference is Jay Harrison never had the strategic relationships I had. He never worked with multi-billion-dollar companies. With and for are not the same thing. The people work with me. The largest architectural firm in the world and the 5th largest company in the world. That's what we have at working with us. Go online and look at the documents. We have an amazing, one of the top 10 accounting firms in the world. In Houston, right? All right, I'm going to continue. After I laid all that out, I'm going to reread that because I think y'all need to hear that. A distinction, because I'm proud of myself for that. That was a great idea. A distinguishing strength of Heritage REIT lies in its existing base, 40,000 investors. And that's what I told y'all over and over and over. Because I had so many people, can I invest more? No, we need the 40,000 people because you're going to invest more, but not much more. There's never going to be a time where I come back to you guys and say, look, I need $1 million. No, this ain't church. This a plan. See, at church, everything is speculation. And this is speculation to some extent. But if you create a real framework and you don't have to bullshit people, you can just tell them the truth. And that's what this is. That's why I create all these documents and I implement them or upload them on the website strategically. That's why you have to follow all this. All right. Scenario. It gives a scenario up that says that the scenario is round 2, community reinvestment, which is us. Each investor contributes $1,000. $40,000 uptake. 16 million new equity. Now, he's only talking 40%. So he's not talking about everybody giving $1,000 because it would be more than $16 million if everybody gave it. That would be another $20 million, right? But this is the scenario that's laid out. Leverage times 10 is 160 million new capital. So we just raised $160 million for the second phase. Now, does anybody remember what type of investment we were looking at recruiting from the private equity company? About $250 to $300 million. So we don't need them. We can do it ourselves because that's what you will be giving up. Because in the end, you'll be in 5 years, you'll be giving up another 20% to private equity for borrowing that money. Now, co-invested with PE tranches reduces blended cost of capital, demonstrates market confidence. Now, what does that mean? You guys are going to read that. Co-invested with, essentially that means you cut the cost of the private equity investment. So the scenario is looking at a strategic joint venture between or alliance between the private equity company and our original investors. And we don't want to do that. Okay, I don't want to do that. But that is an option. That is an option. All right, benefits, liquidity, flexibility, reduces reliance on PE tranches, valuation support, shows grassroots confidence. In other words, when companies start to look at us to make acquisitions or to invest in our company, or even to invest in our company when our company goes public, it shows how our company was run. The right decisions were made. That's why there's all these SEC laws on our website. That's why I did things a certain way. That's why I had all you guys sign an NDA. Because things have to be done as if you're already a large organization. You understand that? Okay? Beneficial evaluation, reputational leverage. Community validation drives institutional confidence. So what does that mean? If we trust each other, then others will trust us. Man, that speaks volumes just to the Black community. Think about it. That's why people don't trust to do business with us, because we don't trust each other. Why are you going to trust a group that don't trust one another? It doesn't make sense. It doesn't make sense at all. Reputational leverage, community validation drives institutional confidence. Optional co-investment, PE investors can match community tranches to maintain parity. Okay. What does that mean? That means sometimes it's good to have a big brother. Sometimes it's good to have a big brother. It's been my pleasure and my benefit that in situations I've had champions. So what does that mean? I was always a smart guy. I was always a capable guy. But I always had a champion in the organization or a mentor in the organizations that was well leveraged, that he could help me through the process. You understand what I'm saying? And so that's what that means. If you got the private equity company, you have to realize the private equity company is a marketing company too. Imagine if we had a relationship with BlackRock, company that y'all mostly familiar with. You've heard of the name BlackRock. BlackRock knows what you do. So what they do is they come to you with deals. I remember understanding that being in my first office. And people would come in and out and say, hey, Juan, what about this? Don't you guys do drywall? And don't you do, well, I got a project over here. And but I hate to minimize it, but it's like that. All right. All right. Legal and fiduciary. I'm gonna read through all this fast now. You got legal and fiduciary. Legal fiduciary continued continuity. Okay. Heritage Holding Company maintains segregated custodial accounts, no commingling. Everybody know what no commingling is. Proxy Reid talks about my money again with my ownership, 15% ownership, perpetual and heritable article. That means it'll be inherited. It is stabilized in Articles 6 and 9. All Series B participation, which means private equity, conform to Reg D 506, whatever that regulation is. Binding arbitration venues, Harris County, which is where I am. Now I talk due diligence package checklist, corporate governance, and it just lays down a lot of articles where you can identify these laws, and I suggest you guys do that. I know you probably won't, but I would. Now it talks about summary of private equity reviews, entry phase, years 3 to 4. And again, this is the second phase of investment. This is after we initially invest the $20 million and get the $200 million line of credit, hire the CEO, hire the CFO. So that's when we're looking at talking to them. Entry phase 3, phase 3 of 3 years or 4 years, growth capital. Okay. That's what we're looking at. We're still growing. We will still be growing at that time. We're going to grow for probably 6 years. For 6 years, we're going to be growing. Equity classes, community A, common, institutional, preferred. Your stock is common, which means you have no voting rights. You can't vote on that. You have stockholders that vote for you. Okay? So you're going to be able to communicate with your board members, right? Recap option, community round, 16 million organic capital, which means that we just talked about that. That means we invest the money on our own. Governance, independent investment committee with dual signature organization. That means the CFO and someone on the board, originally it was me, have to sign, got to have 2 signatures before anything happens. It can't be the CEO. That's not how it works. See, some of y'all didn't know that, but the CEO is simply a marketing tool. And he does the business. But there's so many regulations around anybody that leads. I want you guys to know, well, except for Donald Trump. But in business, you normally got to have parameters around whoever's in leadership. That's why I've written in so many parameters that I can't touch y'all money. Okay, let me continue. I'm almost done. Summary of private equity review. Okay, governance, exit, refinance, portfolio sale, or roll up to Heritage Global REIT. one, right? All right. Heritage REIT provides private equity. This is the conclusion. Heritage REIT provides private equity partners a dual engine platform, a stable, audited, yield producing, real asset base, and a proven community reinvestment mechanism that can be reactivated for future capitalization rounds. This architecture blends institutional discipline with mass capital democratization, offering both financial strength and social impact. In other words, when we sell the company intact and already successful. Okay. And I'm not even going to use the word unfortunate, but most Black individuals are smart enough to do what we're doing, but they're not patient enough. All right. That's all I got to say tonight. I'll see you guys tomorrow night. Go back and watch this live and memorize everything I said.